Top three things in my notebook are number one, Asia, number two, the US dollar, and number three, the fallout effects for oil. So the first thing that I want to do is just highlight Asia. I mean, Asia, if you're not long Asia, you're just not that smart, obviously. So if you're not long the things that have the biggest central planning, again, those two big things away from Europe, obviously, are China and Japan. Economics have obviously been so bad on the Abenomics front, and now from a Chinese stimulus perspective, they're reflecting on growth slowing, deflation becoming a real big problem in China. Those markets are just ripping. I mean, obviously these things make no sense, but at the end of the day, if you stay at the playbook, those with the biggest central plannings have had the biggest market moves, whether they be European moves or Asian moves, with the Nikkei ramping another 1% overnight to up 11.4% for the year to date. China up another 1.6%. It's up 14% since February the 9th. That's just a parabolic move, up 8.3% for the year to date. These things, relatively speaking, to the U.S. equity market, the S&P 500 up 1.1% for the year to date, are outstanding returns. The Kospi, its biggest session since July of 2013 last night, up 2.1%. The Philippines up over 8%, a market that Darius Dale likes. Again, lots going on in Asian equities. Maybe it's the high point. I don't know. We'll have to see about that. Point number two, U.S. dollar. Get the dollar right, you get a lot of other things right, not the least of which is everything in energy. So again, if you've been long the dollar is up almost 19% in the last 6 months. Oil is obviously down over 50% over that same time period. If you just got that right, you would have certainly got a lot less wrong. Again, we'd stay with that. The dollar is your friend on the long side. Immediate term trade support is really, 98.5, call it. So if Janet gets more dovish tomorrow, and the market was kind of betting that she might, you would see the dollar down and see more of a market day like you saw yesterday. Don't forget that everything went up. Yield chasers went up. Really, even energy stocks were up with oil down. So again, the market is almost begging her to get more dovish on the margin than expectations were baking in. So something to watch on the dollar. If she doesn't get more dovish and she signals a rate hike, what you're going to see is the dollar goes straight back up. And oil, geez, you could have a 3 handle in front of WTI on that. So again, I'll look forward to seeing Janet's face when indeed that happens. Finally, the price of oil, just to look at the risk range, it's just completely collapsing at this point. So again, what we have signaled here, in as much as the dollar is signaling a series of higher highs and higher lows, the price of oil is signaling a series of lower highs and lower lows. Lower highs and lower lows are not good for your portfolio, especially if you are levered long those things that are making lower highs and lower lows. So again, that's what oil's saying. Again, you got a 42 handle in front of it this morning. Yes, it's immediate term trade oversold, but this thing is going to get shellacked if Janet Yellen comes out with a rate hike signal, and that she could do more on that front. So again, big policy mistake is being read as very negative for energy markets and for energy stocks, which, as I pointed out, we'll go through with Kaiser in a few minutes. So those are my top three things.